Hello everyone, I'm Ernest and you're back on the Pocket Option channel. What if I told you that this trader used a trading technique that allowed him to turn $10,000 into $2 million in just 18 months? You might think that the trading strategy would be very complicated, but that's not the case. In fact, before turning $10,000 into $2 million, he developed it while traveling as a professional ballroom dancer. What makes this strategy so effective? Even better, what it does have is that it uses strict trading rules that make it easy to determine when to open. The trader we're talking about today is Nicolas Darvas, a professional dancer, a self-taught investor who became famous for his successful trading strategies, which are detailed in his book. Darvas started trading using a unique approach that he developed based on his own observations and market analysis. Now let's take a look at the strategy Darvas used to make his millions. He said that his strategy can be used on any time frame. Like almost all trading strategies, his is no exception. It was based on the idea that you need to buy assets at low prices. It can be applied to any market. However, markets like the cryptocurrency market did not exist at that time, so he traded in the stock market. Now let's take a look at the original strategy that was used. The original strategy was as follows. Buy on breakouts of 52-week highs whenever there is a significant increase in volume. Then you had to wait for a pullback from the breakout. After the pullback is complete, we can outline the highs and lows of the price movement. This is what he called the Darvas Box. So, when the price breaks out of this box, that's when the entry will be made. Before we apply this strategy to the current market, let's take a look at a trade that Darvas made using this strategy. As you can see here, we are looking at the price of Lorillard. First of all, we see that there was a high demand due to the increase in volume, which can be seen at point A. After the pullback from this 52-week high, we can see that the demand for Lorillard was high. Draw a box around it, highs and lows. This is what he called the Darvas Box. At point B, we see a breakout from the Darvas Box. We can also see that at this moment there was another spike in volume. This served as a signal for Darvas to open a position at a price of dollars with 200 shares. Unfortunately, at point C, his stop loss was set at $26 when the stock price returned to the box. Having already seen that the price bounced back above 28, he realized that the price was really about to rise, and so he entered the position buying 200 shares again at $28.75. We see this happening at point DB and point E. We see a continuation of the trend, which led Darvas to buy another 400 shares at around 36, and already at point F, he bought another 400 shares at $38 because the price movement continued to show support even after a slight drop. And in the end, at point G, the shares were sold for 57, which brought about a 60% profit. However, if we only took into account the purchases made at point D rather than the purchases made at points E and F would have brought the profit closer to 100%. Even though the strategy worked well when Darvas traded it, critics say it was, in many ways, it's related to the fact that Darvas was trading using this strategy during the period when the market was in a strong trend. So, according to critics, you could buy anything at any moment and make a profit, regardless of whether you're a professional trader or not, or what strategy you have. However, we also have to consider that during the times when Darvas was trading, there were no things like real-time charts or advanced indicators, technical tools, or trading view. And right now, we have many more different tools available for each technical, fundamental, and other analyses. So, let me show you an improved modern version of Darvas. The box trading strategy, which provides a higher percentage of winning trades when used in today's markets. And this strategy will use indicators as well as a fixed set of rules that are largely based on the strategy. Darvas Box, based on the main strategy we talked about. Now let's switch to trading view. And let's add these indicators to the chart. The first indicator we will add to the chart is the Maybelline W indicator. We go to the indicator search tab, find the indicator by name, select the one created by this user on TradingView and add it to the chart. Now let's change the indicator settings themselves. We select settings, go to the style tab, and we will change the second color to blue so that both colors are the same. This will basically help us and won't confuse us unnecessarily. That's all we needed to do to set up and add the first indicator. Let's move on to the second one. Our second indicator is called the Darvas Box. We select it, created by this user on TradingView, and add it to the chart. And the last third indicator that we will be adding is WADA ATA. We are looking for exactly version H2, created by the user Cheyenne, and we add it to the chart. Let's move on to the settings for this last indicator, and also click on the style settings. We will change the thickness and color of the lines to make them more noticeable. That was basically all we had left to do. We have added all our indicators and configured them. Now let's see how we will use them in practice, trade, and earn with their help. The first indicator we added will be used as a trend confirmation indicator so that we know what the current trend is in the market. The Darvas Box indicator will work by plotting lines on previous highs and lows, which makes the indicator similar to the Donchen Channels indicator. The WAE indicator also tracks the direction of the trend. That is, it shows us, one might say, the strength of this trend. And now that we already know, now that we have all these components, let's take a look at how exactly we will use the indicators before opening a buy or sell position. Let's first look at the conditions that need to be met to open a buy position. First of all, the price must be trading above the MW line. This shows us that we are currently in an uptrend. Secondly, there should be a green bar on the histogram. That is, the band should close above the blue ATR crossover line, the white line, and thirdly, the candle must close above the upper line of the Darvas box. So all these factors show us that the price is making a short-term breakout once the breakout occurs. So we will open a buy position. Now let's look at the conditions that need to be met if we are opening and looking for a sell position. To open a sell position, the following condition must be met. First of all, the price must be trading below the line. This indicates that we are currently in a downtrend. Secondly, there should be a red bar on the histogram, so the bar must close above the blue ATR crossover line and the white line. Thirdly, the candle must close below the Darvas box line. This shows us that at the moment we can expect a possible breakout downwards. Based on this, we will open a short position. After analyzing on TradingView, once we've determined whether there will be a buy signal or a sell signal and found the asset we need, we move over to the Pocket platform, quickly locate it, and open the corresponding buy or sell trade. So here we are on the real chart. The Australian dollar against the New Zealand dollar, we can see that all the conditions are currently met except for the histogram. The green candle is below the white line, we're a bit late, and we can see that there's some fluctuation happening. Basically, that's enough to enter a buy trade on the breakout. We'd switch to pocket option. Here we also open a 1 minute chart and can open our buy trade for 2 minutes. We see that we have an 81% payout on this currency pair, and now all we have to do is wait. Let's see if the revised version of the Darvas strategy really works. Successful trade. You see, everything is working. We earned 405. The long-awaited breakthrough happened just as we expected with this strategy. Cool. I suggest we look for another asset. Let's get into another trade, and I'll show you how this basically works. I'm on Pocket, as you can see, and I'm just going through each asset one by one. Yes, for example, I see name 1, I go to the trading view, and in principle, I enter the same name, Australian dollar, Canadian dollar. I'm checking if the current situation on the chart is right for me to enter based on our signal. Yes, according to all the indicators, we can see that the price hasn't broken through our lower red boundary. Yes, it's also not below the blue line, so no, I'm just going back. Again, I'm on Pocket, for example. I take the euro dollar, go to trading view, type in euro dollar, and once again, I'm searching the indicators we need. This is how you simply switch from one asset to another. These can be both cryptocurrency assets and stocks. Basically, you can find any asset on TradingView. You see the signal, you enter the trade. It's very simple. So I just found a good trade. At least you can see that all our signals are met, and this will already be a sell trade. Let's plan a buy. I'll show you how it will be with the sell. Swiss franc, Japanese yen. It's being traded. Let's find this asset on Pocket option. And basically, we quickly enter a sell position. We see that the price is a candle. The last one closed well below our dynamic red support level. So in the short term, we have selling pressure forming, and we entered the trade. In the trade, we just have to wait for the results. Awesome. We earned $460 with a maximum payout of 92%. Awesome. I managed to show both a buy trade and a sell trade. Both are positive. I hope this video was as helpful as possible for you. Go to TradingView, try it out, test it, and trade together. The new modified Darvas strategy. Well, if this video was helpful to you, make sure to subscribe to our channel. Subscribe, hit the bell so you don't miss out on other new helpful videos. We also hold weekly streams on this same channel. Well, this was Ernest from the Pocket Option platform. Talk to you later and have a great day.